dear students, we are doing with daily current affairs analysis in a very short and precise manner, which will greatly helpful for you to clear this prelims definitely, because we ensuring that about 70% question will come out of this analysis session. So to start with, student enrollment in higher studies have risen by 7.5%. So this comes under GS2 education reports and indices. So this report actually gives the performance indicators on what is the status of higher education today in the country. So the report is the 10th series. This is done by All India Survey on Higher Education, and this is released annually by the Department of Higher Education, which comes under Ministry of Education. Okay, so the current status of education, this you can write in mains also if any question comes for education. So the data is collected with several parameters like teachers, students, enrollment, programs, examination results, finance and infrastructure. So educational development such as institution density, gross enrollment ratio, pupil teacher ratio, gender parity index, this all also calculated in this survey. So according to this survey, there has been a growth of 11.4% in the student enrollment. So the overall student enrollment have risen. The rise in female enrollment in higher education is also raised, and the total enrollment in higher education that is also raised to 3.42 crore, and about gross enrollment ratio, it is increased. Gross enrollment means the percentage of students belonging to the particular age group enrolled in higher education. So the male population for gross enrollment ratio is 26.9 and female it is 27.3, and for SC 23.4 and for ST it is 18.0. Okay, and national gross enrollment, this is very important that the national gross enrollment ratio is 27.1%. So gender parity index in higher education is actually 1.1, that have been also increased compared to the previous year. The pupil teacher ratio is 57.5%, which means the number of students attending a school is divided by the number of teachers in the institution. Okay, the next issue is emergency credit line guarantee scheme. So this comes under GS3 inclusive growth. This scheme was actually announced as part of Atmanirbhar Bharat package in 2020. This is to help business including MSMEs to meet their operational liabilities. So government provides member lending institutions 100% guarantee against any losses if there is any non-repayment of this funding. So this is a demand-based scheme. So sanction disbursement are made by based on the borrower's requirement only. So the overall ceiling was initially announced for rupees 3 lakh crore, then it was enhanced to 4.5 lakh crore. So this comes under Department of Financial Service, which is under Ministry of Finance. So the eligibility criteria is for MSME unit, business enterprises, Mudra borrowers, that all comes under 1.0. In 2.0, that borrowers belonging to the stressed sectors. Okay, and the 3.0 is borrowers belonging to the hospitality, travel and tourism, and 4.0 it is the existing hospitals for that. Next, FPI pull out from Indian markets. So this comes under GS3 economy. All you need is to know about the basic facts about FPI. This consists of securities and other financial institutes held by foreign investors. So this does not provide investor with direct ownership. It is relatively liquid depending on volatility of the market. In India, FPIs are allowed to invest in various debt market instruments such as government bonds, T-bills, state development loans. FPI is a part of country's capital account. Okay, so that you need to know about difference between FPI and FD. FPI means the investor will purchase stock, bond and other assets in foreign country. So investor need not to go directly and they need not to bring investment does not have any control also over securities. FDI means the investor purchase direct business. They must have control over their investment. FPI is more liquid and less risky than FDI. Okay, so that's all about today's news. Thank you.